Bismillahirrahmanirrahim. Dear student, Assalamu alaikum. Today our lecture is about the forms of advances, or we can say that the types of advances. Means that the banks give the advances loan. So in different shapes the banks they are giving loan. One by one we will discuss. Forms of advance. Bank, that is a profit seeking institution. As we discussed in the definition of the bank, that bank is a financial institution which accept deposits at low interest rate and lend those deposits at a higher interest rate. The difference between accepting interest rate and lending interest rate, that is the profit margin of the bank. So the surplus balance from the customer at a low rate of the interest, and when the bank make those advances at a higher rate of the interest to an individuals as well as firms, so in this way they are earn their profit. The main functions of the bank is accepting deposit and lending loan. Banks also provides some other functions in shape of services like ATM services, online transfer, letter of credit services, different services provided by the bank. On that they are also generating their revenue, but the main sources of the income of the bank is the interest rate that are earned on the advances are giving loan. So bank, dear students, they are mostly giving loan short terms as well as medium term loans and long term loans. The main form of the advances is under overdraft, cash financing, bank loan, and discounting of the bill. These are the major types of the advances which are given by bank one by one. Now we are going to discuss it. So first one, overdraft. Overdraft, as its name indicate, that drawings more than their deposits. Overdraft is that type of short-term loan when the customer or withdraw more than their deposits. Dear students, keep in mind that overdraft facilities are only provides to current account holder. Current account is that account that on which bank neither offer the interest, and similarly the customer is also not claiming for the interest. Only for the safe custody the customer deposits or open these accounts and make deposits in it, and there is no restriction on the deposits amount and on the drawings in the current accounts. Anytime the customer wants to deposit money and anytime the customer wants to withdraw the money, so during the banking hours they can withdraw money from that accounts. So overdraft facility that is provide only and only to the current account holders. For example, overdraft is that amount that customer have some less amount in their bank account and they need more than their deposits amount. So bank provide them such facilities, and this is called overdraft. If any time a businessman bill or check is greater than his bank balance, so he or she may request the bank to manage to allow his account to be overdrawn by some specific sum of money for the short period of time. For example, a businessman has 20 lakh in his account and he needs 23 lakh. And also now he have the right to withdraw 23 lakh by requesting the bank to manage 3 lakh overdraft amount. In this sense, he can withdraw 23 lakh. 20 lakh their own amount and 3 lakh overdraft. Interest will only be charged on 3 lakh, not on total 23 amount. Why? Overdraft amount is only and only that is 3 lakh. So such it means that the bank give 3 lakh as an advance loan to the current account holder for the short period of time. This 3 lakh amount is called overdraft. So overdraft is that form of advances which is given by bank to current account holder for the short period of time, and in this the bank allowed their customer to withdraw more than their deposits amount up to some limits. This type of extra drawings more than their deposits is called overdraft amount. Alright, overdraft से दी overdraft like स्तासु पर बैंक की current account the only and only overdraft facility the सिर्फ पर current account holder तवर्कड़ी की bill account holder ता नवर्कवरी की like if you have saving account, if you have fixed deposits accounts, if you have profit and loss account, so this facility is not allowed to these account holder. Only and only this facility is allowed to current account holder. उस तासु पर account की for example यव लाख deposits थी और तासु ता पकार दी 1,50,000. So you will write a check by 1,50,000. तासु बदा यव नीम लाख रुपो check उलिके बैंक तबे वारके और बैंक तबे यव request होके check kindly issued us या issued me overdraft. बैंक पता सुता 1 lakh the खपल account ना और plus 50,000 as an advance loan दर की. This 50,000 is known as overdraft. Our interest only be charged on this 50,000. Maximum 45 days lifetime of the overdraft. You will return back this overdraft amount within 45 days. So this short-term loan is called what? That is called overdraft. Hope you will understand. Now, what are the advantages of the overdraft? A customer, when they are taking the overdraft, so what are their advantages? The customer is able to meet the working capital requirement of the business. Mostly overdraft facility या overdraft loan is taken by businessmen. So when businessmen they needs working capital, so they quickly take the overdraft and compensate the working capital requirements. What is working capital? Working capital means the daily routine cash requirements or cash that is used for the operating activity of the business, daily routine activity. So for that purpose, business they need money, and overdraft is an opportunity for the current account holder. They can entertain it, and in this way they will compensate the requirements of the working capital easily. Second one, advantages of the overdraft is the customer gets the facility to overdraw his account as and when the need arises up to the approved limit. In a up to certain limit, there is a limit. Any persons, they have their limits. So up to their limit, they can use this facility, the overdraft, and compensate their or fulfill their needs according to the demands. Whenever the customer has surplus funds, so he or she may pay such funds into the current account to reduce or even to settlement the overdraft balance. Like 5 days before, you take the 50,000 overdraft amount. Now you have 20,000. So you deposit 20,000 in your account. Now your balance is 30,000 negative. And still you have now 30,000 loan amount. Again you have now 30,000. So you deposit again the 30,000. Now your overdraft is completely, you pay the overdraft amount 50,000. Now your account balance is 0. And when you further make deposit in your account, so then your account will be increase with the deposit amount. Since it is a running financing, so there are no restriction on drawings more than once, provided the total amount overdrawn does not exceed the agreed limit. Like you have an current account and the banks give you the 5 lakh up to 5 lakh ups limit. Now you can have the right to withdraw up to 5 lakh. In a maximum, your limit is 5 lakh. It doesn't mean that at once you can withdraw 5 lakh. You can, like, you need 2 lakh now, so you can withdraw 2 lakh. You need 3 lakh, you can withdraw take overdraft 3 lakh, 4 lakh, 5 lakh. But you cannot exceed more than 5 lakh. Your limit is 5 lakh. So up to 5 lakh, you have the right to take overdraft amount. The interest charge only on the withdrawn amount, overdraft amount only. That how much, like you withdraw 5 lakh, but in this 5 lakh, 2 lakh is your own deposits and 3 lakh is overdraft amount. So interest will be charged on 3 lakh only. Second one is cash finance. Cash finance is a type of loan. It is also called cash credit. Mostly, cash finance is commonly offered by all the commercial banks. A cash credit or cash finance is an arrangement by which a banker allows his customer to borrow money up to a certain limits. Up to some limits, this loan should be taken by the customers. Pledge or promise of security can be done by the goods produced, merchandise or tangible security. In cash finance, look at, it is not necessary that you are the account holder like in overdraft loan. Any person, they can take this loan by providing some security to bank. That security may be in the shape of goods, maybe in the shape of inventory, maybe in the shape of tangible assets. So the value of those goods, the market value of those goods will be calculated, and up to that limit, cash finance will be given to you from the side of bank. Mostly cash finance is long-term loan. This is a type of long-term loan. For example, if I have some land, yeah, if I have some goods, and the worth of those goods or the market value of those goods is 1 million. So now up to 1 million I can take the cash finance. In such facility, the banks allow the businesses or firms are to borrow up to a certain limit, either in lump sum or either in installment. For example, look it, I give an assets or goods or merchandise and their worth is or their market value is 5 lakh. So up to 5 lakh I can take cash finance loan. As a lump sum, yeah, let's suppose 1 lakh I take, 2 lakh again I take, so total is 3 lakh, and 2 lakh again I take, so total 5 lakh that is completed. So we can take this loan or the customer can take this loan in installment form or in lump sum amount, and interest will be charged on the loan taking amount. Up to how much limit you take the loan, so interest will be charged. For example, your limit is 5 lakh but you take cash finance only 2 lakh. So on 2 lakh only the interest will be charged. Now precaution in the cash finance loan. The customer to be honest and trustworthy. This type of the loan should be given by the bank to trustworthy and honestly customers. They have familiarity with the different markets, commodity against which advances are given. Why? Because the commodities are the goods against which banks they are giving loan. So their market value that should be calculated, and the commodity which is given by the customer as a security to the bank. So those goods or those commodity must be sellable. It doesn't mean that this is such type of assets, yeah, these are such type of the goods which is not sellable in the market. So in this the bank will be in the loss, the risk of the bank will be increased. Means that bank will accept the security or the goods against the cash financing loan, that those goods will be sellable. Why sellable? If the customer become defaulter, he or she is not pay back the loan amount on time, then what the bank will do? Bank will sold out their security and compensate their loan. So that's why those security must be in the sellable condition, and the position of the goods will be in to the bank. Similarly, storing of the goods in the bankers godown. You will provide the goods as a security to the bank. So bank will store it in their godowns or in a specific place. Bank don't have the right to use these goods, but they have the right of the possession. They don't have the right of the use, but have the right of the possession. Clear? So the goods which that is pledged by the customer, those have some stable market. Their value should not be devalued. Clear? Too much. And there should be a proper valuation methods. And all the goods which is given as a security by the customer to the bank, so those goods must be insured. Why? If some uncertain situations come and the goods becomes demolished, yeah, they caught fire, yeah, whatever, something happens, so then they will lose their value. If they are if they are insured, so then the insurance company is responsible for any kind of the damage. These are the precautions forwards that when the bank they are getting the goods as a security while sanctioning the cash finance or cash loan to the customers. Third one is bank loan. Third one type of the bank loan is that is called bank loan. So a bank loan is a formal mean of the borrowing. Bank loan are either payable in the periodic installment or in lump sum at a fixed future time. Bank loan is a that type of the loan. This is short terms as well as long terms or medium term that should be paid by the customer with the passage of the time, or they will pay by in future at a lump sum quantity or some in the installment quantity that should be paid back by the customers. The features of the bank loan are that is sanctioned by for a fixed period of time. Clear? The time period must be fixed. In case the loan is sanctioned against collateral securities, so it is called a secure loan. And if no collateral security is taken, so it is named as clean loan. Now here there is an options that this type of the loan that is given, and if bank not ask for any security, so we can say that this type of the loan against which banks not get any collateral security, so this is called what? This is called clean loan. And if some security that is taken by the bank, so this loan is called secure loan. The total amount of the loan placed at a disposal of the borrowers in lump sum or pre-arrangement period and at the agreed rate of the interest. In this case or in this type of the loan, like you are taking 3 lakh loan from the bank. So amount is fixed now. Now you have the choice that you should take this 3 lakh at once in lump sum or by 1 lakh installments, and interest will be charged. The interest rate will be fixed at the time when loan is sanctioned to the customers. In bank loan, keep in mind, dear students, that a separate loan account is opened in the name of the borrower, loan takers. And up to how much loan he takes, so interest will be charged on that loan amount. And when he pay back that loan, so the loan amount will be deducted. Balance loan amount that should be deducted. The sanction amount of the bank has to be taken in fully by the borrower and not partially. Clear? Like there is a 3 lakh loan, so you will take this 3 lakh loan completely, no installment. Before that, I say that this is that should be taken in installment, but no, this should be taken as a lump sum. Installment will be taken only cash financing. The bank loan that should be taken as a lump sum. Like you take loan of the 5 lakh, so you will take 5 lakh loan completely. Clear? The interest rate are paid the borrower from the date the loan is transferred to the borrower's account. As I said that when this type of loan is taken by any borrower, so a separate bank loan account is open by the name of the borrower. So when This loan is transferred to that person account. Now interest will be charged from that day, even though he or she take this loan from that account or not, but interest will be charged from that date when the loan amount that is transferred to his or her accounts. So hope you will understand the concept. The fourth one type of the loan is discounting of the bill. Discounting of the bill, that is a short-term advance methods. Bank buy a bill of exchange from customers before their maturity dates at the discount prices. Look at how, if we engaged in a credit transaction, let's suppose I purchase credit purchases from you, the 1 lakh, and against that 1 lakh I issued the 1 lakh bill of exchange, that is called bill or bill of exchange, and I write the maturity that after 1 month it will be mature, means after 1 month I will make the payments to you. Now look at, when you take this bill, so after some days you go to the bank and present that bill in the bank. Bank will give you money and will take that bill from you. For example, instead of 1 lakh, bank will buy this bill from you on discount price. Discount price means less than 1 lakh. That price, when the bill is accepted by or take by bank from you less than 1 lakh, that price is called what? Discount price. Will give you money, and in security bank will take that bill. When maturity of that bill comes after 1 month, so the bankers will present that bill to those company who issued it and will take 1 lakh complete. Clear? So discount of the bill is half. That is a type of the loan. Like I have the 1 lakh bill, I give that bills to bank, and let's suppose according to the company bank policy, they are discounting the bill by 5,000. 95,000 bank gives to me, and banks take that bill from me. So this is a type of the loan that he given against that bill. That's why this is called discount of the bill. I have given another example here, that a bill of the worth 20,000 bought by the bank at 1900 discount price will be called as discount of the bill. The bank will receive the full payments after the maturity date. Clear? Now, disadvantages of the discounting of the bill. So this is same payment of the funds. In safe way we can make the payments. And high liquidity. High liquidity means any time the bill holder can sold out the bill and convert it into money. And similarly, this is free from price fluctuation. Price fluctuation means increase or decrease in price. It means that their prices are neither decreasing or increasing once it discounts. Then facility of the rediscount. Rediscount, look at, I issued a bill of discount to you, you people discount it to another one person. Now another one person can sold out it on discount price to another one person. That is called facility of the rediscount facility. Last one facility is double benefits. Double benefits is what? Like, look at, if we are engaged in the credit transaction, so I issued a bill of discount to you, the $3 lakh, and you also issued a bill of discount of $3 lakh to me. I present my bill of discount to the bank and take, instead of $3 lakh, I take $2,99,000. And you also present that my bill of discount and bank give you $2,99,000. So you are also getting benefits, I am also getting benefits, and when their maturity is comes, so I will give back $3 lakh to the bank, and you will also give back $3 lakh to the bank. This is called double benefits concepts. So hope you will understand, dear students. These were the 4 types of the bank loans, majorly which are sanctioned by the bank. If you have any questions, so ask me. Till then, Allah Hafiz.